This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. Hope you all had a great weekend. It is Monday, July 14th. This is Not Your Advisor with NYU Grad. Let's jump right into today's session. Before I jump into the macro breadth numbers, I did want to reshare if you missed the private chats for paying subscribers or on the Substack notes this morning. I had posted a interesting factoid of trends in the luxury watch market. It has been crashing continually for the past 3+ years. During the COVID bubble, watch prices like Rolex, Patek just exploded higher, almost Eiffel Towered, and are now precipitously falling. If you take a look at the charts that I shared on this, the notes or the show notes for today's podcast, you'll see that although Rolex, if you go back to the data set that started in 2019, is still up 47%. And I'm sure if you bought a Rolex Submariner in the 70s, you're up thousands of percent. But I'm just talking about the last 3 years. The Rolex index is down 20%, and the Submariner itself is down 19% in average price, and the Daytona is down 35%. Patek Philippe is not immune to this. Obviously, they are one of the higher end luxury watch brands. They are also down 29% in the last 3 years, and one of their most famous, most popular watches, like the Patek Philippe Nautilus, are down 28% in price, 28 to 30%. So I thought that was interesting. It's not just the car market. It's not just some of these housing markets that are rippling across the U.S., but it's all of luxury. They always said luxury can't go down. Well, I'm telling you, it's slowly going down. And on another tidbit, during that research, I saw a documentary about Rolex rippers in the UK. They are basically robbing folks with at gunpoint or at knife point, sometimes hurting / killing people for their watches. It doesn't have to be Rolexes, just high-end watches. I'll post that documentary on the show notes as well. But let's jump into today's session. So the markets just closed while I'm recording this. It was green across the board, but we kind of limpered all day sideways. It was very low volume again. The only thing in the headlines is either Bitcoin or Trump and the tariff news, whether it's Mexico, EU, whether it's future tariffs on Russia. That's all that seems to matter at this point. Again, like in April, I think the market is calling Trump's bluff. It seems that all that news just is like, we go down for a few hours and then we bounce. But just know that this is happening on low volume, so we have to be very careful. We had 397 new highs on the NYSE today versus 111 new lows. 57% advanced versus 40% declined, 24% below the 50-day, and 39% below the 200-day moving average. It was a mixed bag on mega cap. You had names like Apple, Nvidia down on the day. Apple was down 1.2, Nvidia was down 0.4. Microsoft was also down, but marginally down 0.07%. Tesla was up 0.87. Amazon did nothing. Alphabet was up 0.8 and Meta 0.37. Looking at all the sector groups, it was just a mixed bag. So the sectors that led were communication services up 0.84, industrials 0.62, financials a little bit over 0.5%, real estate 0.48, utilities 0.39, Tech was down 0.12% today. Basic materials down 0.58%. And energy down almost a percentage point. Looking at NASDAQ profitable companies making new highs. I have 14 names here linked in the premium show notes, but included names like Palantir, Robinhood, and Coinbase. Looking at the S&P, what was up? You had Autodesk up 5.3%, Palantir 4.9%, EQT 4.7%, Fastenal 4.5%. In the NASDAQ 100, AppLovin up 6.5%, Autodesk again 5.4%, Shopify up 4.3%. To the downside, Waters Corp down 11.95%, Halliburton down 4.8%. I don't know what is going on there. Dow Incorporated down 4.8%, Micron 4.6%, and Constellation Brands down 4.5%. In the NASDAQ 100, you had Micron again, Lululemon 2.7%, and PDD Holdings down 2.5%. If you don't know what PDD Holdings are, they're involved with like Temu, all the Chinese direct-to-consumer to the U.S. e-com. So let's switch over to the macro. I have about 20 charts that I want to walk the paid subscribers through. We'll cover the macro, the best defended, as well as the Magnificent Seven.
We can't forget that this is just a small taste of the in-depth analysis that Not Your Advisor provides. They don't just throw numbers at you. They connect the dots, find those hidden trends, and help you understand what's driving the markets.
If you want the full picture, you got to check out the full Not Your Advisor episode.
Don't forget to subscribe to notyouradvisor.com.
And all their premium content. I mean, it's like having a direct line to what's really going on in the market.
It is. It really is. They cut through all the BS and give you the kind of info that you just won't find anywhere else.
Think about this. Investing is all about making decisions that work for you and your goals. You're the one in control.
Not Your Advisor can give you the map, but you choose where you want to go.
And with that empowering thought, we'll sign off. Happy investing.
Stand clear of the closing doors, please.